All right, so the market is open. It's been open for a while. We're past the first 15-minute shakeout. But what really caught my eye was I picked up a couple of losses since I last streamed yesterday in the afternoon. All because of this giant, ridiculous candle. Look at this ridiculousness. This is a 4 hour candle. Look at the nasty wick down here. So, yesterday, what happened was I had the buy limit down here at the 675, and it stopped me out by literally 3.5 points, and then it went up and moved, more than 500 points up. So the previous short somewhere over here saved me by 4.5 points. So I guess it makes sense. It's only fair that I get stopped out by 4.5 points or something like that here, which is fine. But then it also blasted through some of the, I think, two shorts that I had up here as well. So I think I had it on the 4,000, which would have been right here, and then the 4,075, and then the stop would have been at 150, and it just blew right past that. So very volatile move yesterday. These are the candles, like it's up and down, and so these big quarters can come on a Fed day. It can come on a very it can come very quickly. Since then, it pulled back a little, calmed itself down a little bit, and I wasn't sure if it was going to pull back all the way, and so I got out of the way. I didn't put on the 34 and the 3 and the 925, 33 925, because it was so close. Like, and if you did a Fibonacci extension, for example, there's way more room for it to retrace back to hit like the 50% and the I forget what the other one is. I have to draw it out really quick, but 61.8. So there's a lot of room for it to retrace back. So I didn't put in the order. I let the market open first, and it seems like the major level is holding some buoyancy here. We have another hammer candle and another um, bullish engulfing that's going to close in 3 minutes. It's probably going to form after that. So uh, the aggressive move would be to take the front band here at 34 for 34,075. That would be the aggressive move. And then this is my backup order. I'm hoping it retraces back into the backup order because I took a couple of losses. I don't want to be too aggressive. That's the kind of move um, that would come back to bite me. If it breaks above here, I will do this though. If it breaks above 155, I'll play the pullback up to the 75. So I have an alert there. If it breaks above, which, I mean, any second now, this candle is going to close, and it's probably almost definitely going to be an engulfing candle. Um, I wish I was aggressive and put it here, but it was scary. It's a scary thing to do after so many candles back and forth. Like, where do you think the support is going to be? Is it going to be at the previous resistance, or is it going to pull back all the way down here? I don't know. And second guessing that was that was why I didn't put the order in here. The S&P came close to target with all of this messiness. It's pulling back a little bit, and now I'm just leaving it. So this helps psychologically that I'm still benefiting from all of this movement. It's like a buffer mentally. It's a slow moving buffer, which is fine, but over time, it's the strategy works just as well on, I think, any asset or pair, forex pair or index or anything like that. You just have to find the sweet spot of what kind of quarter strategy fits for you. And this one I chose to be the longer swing strategy with the minor levels because I knew it was going to be a slower moving kind of strategy. I've been in this for days now, right? One trade, days. Like, it's going to take me days to get $75 out of this. But that's okay because that's in conjunction with the day trading, more aggressive, more wins and more losses, right? Just more of everything from the US 30 or the Dow. So um, that's it, really. It's a simple day. It's probably going to be a calmer day after the storm that we got yesterday.